Hey everyone, can everyone hear me clearly? I think I'm sharing the wrong screen. All right. Hello everyone. Sorry, just still kind of sorting out the screens flying all around the place. All right. Hey Mark, first guy as usual, right? We got Chukune. Nice to see you. Carlo, Julio, Dorothy, Diana, Yencheng, uh, Colin, Donald, Ellen, Abdul, Marugesh. Nice to see you guys. Carlos, Bob. Bob's not the first this time. Jasper, nice to see you here again, man. Kelvin, nice to see you here too. Right. Darren, Robin, Azam, good stuff, man. Kanemba, nice to see you again. Right. Lars, as usual, nice. Rohan, John, nice to see you guys. Yeah, having a blessed and good day. Uh, Today, I think I spent half of my morning rushing my wife to the get pregnancy checkups and stuff. All right, so it's just getting really real now, right? If anything, if I need to rush off from this webinar halfway through, you know that I'll be a dad soon. Yeah, so gonna be fun times, man. Fun times, man. A new microphone? No, it's not a new microphone. Actually, it's a pretty old microphone. Just that my previous microphone messed up. I think it lasted me more than like 100 webinars or something, and finally gave way. So yeah, it's back to it's a different microphone today. Yeah. Yeah, Azam from KL as usual, right? Are you sure from KL? I thought you're from somewhere else. No, I'm kidding. Right. But yeah, thank you, Rohan. Thank you, John. Right. Zayed, nice to see you too. Right. Yeah, today's I'm well, man. Kanamba, thanks for asking. Ajay, nice to see you too. Yeah, so today's session, right, is on support and resistance, but more focusing on the pullbacks and overlaps, right? So it's something which I see a lot of us get confused on, especially in the VIP room, right? When you're, yes, last week you talked about the swing highs, you talk about the swing lows, right? This week you're going to talk about the pullbacks and the overlaps. It's slightly different. It's slightly different. It's important to understand the psychology behind the pullbacks and overlaps, right? Because that's where you can really trade the markets quite well. And I'll spend today's session focusing a little bit more on pullbacks, overlaps, and then we dive a little bit deeper into the some of the setups, right? Looking at it in real time together, and giving you examples, helping you decide whether this is a pullback or is this an overlap, right? And because support and resistance actually work in the form of areas instead of specific levels, we will be practicing a little bit of that later to practice our filtering. Okay. Roger, nice to see you. Zayed, last few weeks webinar is all on YouTube, right? It's all on YouTube. I'll show you how to get it in a bit. Desiree, nice to see you here, right? Where have you been in the VIP room? Yeah, I know it's sometimes you're there, sometimes you're not there. Edgaras, nice to see you, right? Nice to see you. Zamish on KL, nah, I don't think you're on KL, right? For the past 100 times, yeah, you're from KL. I'm kidding, right? Hey, Sue, nice to see you here too. Right, welcome. Is anyone joining us here for the first time? Right, if you're here for the first time, let me know. Right, it'd be nice to see you guys here. Leandro, nice to see you tuning in. Osama, nice to see you too. Colin, you're here for the first time. You sure? Name sounds familiar. All right, Fabio, good morning to you too. All right, welcome then, Colin. Welcome to the show. Right, Sim Chahal, first time from Melbourne. Welcome. I think there are a couple of people from Melbourne here, right? Jean, nice to see you too, right? Thank you. Right. Ashoka is also first time here, right? Welcome. Tuan, nice to see you. Definitely not the first time. Richard, Joa. Oh, Joa, first time from Portugal. I think a couple of you guys are from Portugal too, right? Oh, Colin's from Perth. Nice. John Doe. Is that your real name, John Doe? Right? Not sure if it's really John Doe. Right. Rowan, nice to see you from South Africa. Got quite a number of you guys from South Africa too. Right. And I know you can't see each other's questions. Yeah. So a couple of you guys asked like, why can't you see each other's messages? That's because of the GoToWebinar format. Until we move to maybe Zoom or we move to a different kind of format, it functions this way where you can't see each other's messages. But in tomorrow's session, in the live market analysis session, which I will be doing again because our dear friend Cassandra is down with COVID, right? So yeah, you can wish her well when she gets back. I think she's coughing her lungs out, right? Yeah. So yeah, Cassandra's down with COVID, right? So you won't see her tomorrow, right? I'll be covering. I'll be doing tomorrow's session again, right? So yeah, I got a guy called Deadbot, right? Good morning, man. Right, I'm gonna get that Deadbot pretty soon when my kid comes, I guess, right? Okay, Simon, nice to see you. Diana, yeah, yeah. I'll wish her well, right? Yeah, it's the second time getting COVID. It's crazy, right? Yeah. Um, Prince Innocent, it's your first time here. I hope it's your first, yeah, first time here. Nice to see you here, right? I'll wish her well. Wish her well. Yeah, from a cruise, right? It's enjoying a cruise too much. Yeah. I'm due for a holiday, man. I haven't had a holiday in ages. Because I always come back and do webinars with you guys. One day you see me doing a webinar on a cruise. It'd be pretty cool. Yeah. Oh, Jean? Right. It actually took me quite a while. Right. I think it's about how, okay, so John is asking me how long it took me before I became profitable. Right. I would say, I dare say about 4 years. Right. But it is not because it takes 4 years to be profitable, but it's because I went around crashing, and like doing the wrong stuff for 4 years, right? Just a lot of learning the wrong stuff. And that's the thing with Forex, guys, is that in trading, the amazing thing is that you can you can learn the wrong stuff. It's not like studying. When you're studying in university, you can, whatever you read is the right stuff, right? Whatever you read is the right stuff, and you know that you'll be tested on it. The more you read, the more educated you are on the topic, right? But the difference between studying and maybe forex, the world of academia and the world of like trading, is that in trading you can learn the wrong stuff, right? You can learn how to combine. It's like imagine it's like chemistry, right? You got all these different potions, right? So if you mix the wrong potions, you might screw up something, right? You might get a really bad potion, might poison, stuff like that, right? So that's like trading. You got so many different tools. If you mix the wrong stuff together, you got too much of the moving averages, and you got one drop of maybe an oscillator, right? And then you put in like a little bit of the Ichimoku cloud, right? You rely too much on certain indicators, right? The potion they come up with, the strategy they come up with is just not going to be effective, right? So it's kind of like that, right? You can learn the wrong stuff, you can apply the wrong stuff, and a lot of people, especially people who are really smart, right, they get caught up in the world of forex because they get blindsided by thinking that just because I'm good in academia, I'm good in studying, that means I'm going to be good in forex. But that is not the case, right? It's usually it's very, very different from the case, right? So long answer to a short question, right, is that in trading, it doesn't take you that long to be profitable, right? We have people here who have become very profitable over 30 days. I'm not sure if Julio is here today, right? But yeah, or die as a, who's I forgot the other guy's name. Was it Julio? Yeah, I think it was Julio, right? Yeah, but you can be profitable. All you need to do is to learn the right stuff, right? Learn the right stuff, and it's amazing that it's so hard to learn the right stuff here because the world of trading, a lot of people act as gurus, right? Trading gurus, and with the flashy Instagram cars and stuff, right? And you learn a lot of the wrong stuff from them, right? But here at IC Markets, right, or at least from me, you learn the right stuff. I help you filter out the nonsense, right? So that if you just spend 30 days really diligently learning the right stuff, you can be a profitable trader, right? Yeah, Lars will be doing tomorrow's session. Joanna, is okay that you're slightly late, right? All right. Trading in the Zone is one of the best books. Desiree, continue to read the book, right? I read it at least 3 times, right? It's a great book to read. Um, okay, I get a lot of questions coming in. I'm not sure what the ICT strategy is, Edgaras. Maybe you can send it to me on the VIP room. I'll check it out. Maps. Yeah, maps, right. I'll send you a link. I have a little bit of a checklist It's called the EFG methodology list. I can show it to you in a bit, right? What I use to kind of checklist. More in terms of technicals. To decide whether I'm profitable or not. Maybe I'll share in the VIP room later in a bit, right? But yes, okay. Let's begin today's session, guys. Let's begin today's session. Index upon resistance, right? Unlearning the wrong stuff is equally tough. Hey, guy, nice to see you. When will the VIP room work on mobile? I know, right? We have the Android app ready. It's slightly buggy. If you want to test it out, let me know. I'll let you guys download it, use it. It's like I said, it's slightly buggy, right? Sim Shahal, you're asking what's a VIP room. I'll show you in a bit. Okay, but before we begin, I gotta share with you guys a couple of things, right? First, if you're here for the first time, right? If you're here for the first time, go to YouTube, IC Markets. I'm gonna send it to you here. IC Markets playlist. Emmanuel, I can't do that over here because I think it's copyright issues. So I can't send it to you here. This is the link that you want to go to, right? This link is the IC Markets playlist, right? And you can start all the way from the bottom, work your way to the top, right? Covers everything that you need to know to be a profitable trader, right? You will be sick of me, trust me. You will be sick of hearing my voice by the end of the by the end of the webinar, by the end of the 50 webinars, right? You know, your partner will be sick of me. I think it was Junaid previously. I don't know who was it. It was saying that he was scolding her husband, right? Saying that can you stop watching this Desmond guy? Right? The kids are like the kids are going crazy. I haven't we haven't released it on App Store yet. Soon I'll probably need to send you the APK for it. All right. Yeah. So watch these webinars, go through it. You'll be a better trader at the end of it. All right. Now the next thing that you want to do, right, is I'm gonna send you this link over here. Tomorrow, guys. Tomorrow, same time but different place. Same time but different place. On YouTube instead, you'll be doing a YouTube live event, right? That's where you'll be able to see each other. You'll be able to see Mr. John Doe, Garas. You'll be able to see Tuan, right? You'll be able to see each other, right, in the YouTube live event. It's very fun, right? You get to take on the markets together. I think we got a couple of pretty good calls recently, last week, right? So I will be looking at some of the key. I'll be showing you how we practice analysis and apply what we learn, and at the same time, we'll be if you have requests for some of the markets to look at, I will be looking at it there too. Okay. Now, that covers two of the main things. The VIP room, I'm going to share the link with you guys, right? The VIP room, go over to here. As long as you have an IC Markets account with $1,000, right, you will get access to the VIP room. It's a great place to be in, right? And it's a place where we practice together as a team, right? How to be better traders, right? And of course, right, we kind of chit chat over here. My true Aussie cat didn't work out that well. Sorry guys. I really thought it did bounce off quite nicely, but it didn't bounce off to exactly to our take profit level. So I need to introduce some kind of break-even target over here. Okay. But what you can do in the VIP room, right? What you can do in the VIP. Oh god, I'm so annoying. I'm getting tongue-tied. Right. So for example, right, if I'm looking at pound dollar, one of the key things I'm looking at, and um, and for example, on pound dollar, I actually think that the big level to break is down here, right? Maybe down here. Is down here. This level needs to be broken to trigger move down. So I can come in here and I can say, hey guys, right? Take note that this this support level needs to be broken to trigger a move down. That's where I can highlight the text that I want to link it to. I click link object to text, and I can click this support level I just drew, right? Once I confirm it and I send it through, what happens is that if anyone is reading this message for the first time, they can come in here, they can hover their mouse over it, right? And they can see this support level light up. All right, so it's very useful when you're asking questions, right? When you're asking, is this the correct way to draw a trend line? Is this the correct way to draw a channel? And for example, I want to highlight a channel over here, right? I'm just going to draw this, tap that, all right, set, and take note of channel, all right, sorry, take note of bearish channel here. Same thing, highlight the text, link it, and Voila, there you go. This was the channel I'm referring to, and we send the message through. So it allows us to better communicate with each other. I know this is the channel I was referring to. This was the support I was referring to, and yeah, quite fun stuff, right? The link, I think the link I sent it to you guys earlier, right? Um, go here, go here and register, right? You need to upload proof. Go to request access by the site, request access and upload proof of your IC Markets account. All you need is $1,000 and you get access into the VIP room, right? So depending whether you have 1,000, 10,000, 100,000, you got different tiers, different ranks, different badges. It's pretty fun. We'll have a lot of fun in there. Okay, you might not see me around the, rather you will see me around the live trading room a little bit more often, right? So that's where I hang out and try to, as much as possible, give you guys feedback on how to trade better. Fun place to be in. Okay, now let's begin, right? You can earn experience points in the VIP portal by posting questions, right? So you can see ranks and XP, right? Yeah, you know, when you reply to a message, when you react, create analysis, right? All gives you different experience points and you level up. Pretty fun stuff. But I don't want to digress too much, right? I don't want to digress too much. I want to focus on today's webinar, right? So as usual, guys, disclaimer. Remember, okay, Carlo, just a really quick answer to your question. The live analysis session is same time as the webinar starting today. Same time, just that it's on the IC Markets YouTube channel. Okay. Okay. Anyway, guys, disclaimer for today. Remember, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. So please do your own little due diligence before you guys trade. Okay. Now, let's move on to the agenda for today, right? So we're going to focus on two main things. That's my handy dandy pen, all right? Two main things, the pullback and the overlap, okay? Pullback support, pullback resistance, and overlap. It is actually a lot simpler than it looks, right? And I want to touch on it enough. Yeah, I want to touch on it I want to touch on it enough so that we can move on to practicing together. Okay, it's like my brain is a little bit fried. You know, it must be a dad thing. You know, once you're becoming a dad, something like that. Okay, now let's begin. All right, introducing our host for today. For those of you guys who are here for the first time, right, and you're wondering who is this dude that is talking, right? My name is Desmond Leong. Right, this much more vibrant version of me, thanks to Photoshop. Right, so I run the award-winning research firm Everest Fortune Group and also the Forex Army. And a finalist for 2019, 2020, and 2021 Best FX Research and Best Equity Research. Right, so we usually advise the banks and financial institutions on where the markets are heading, but we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. All right, so we have a lot of people who have turned their trading around, 40% to 60% hit rate, 60 to 80% hit rate, unprofitable to profitable, right? At IC Markets, you know, you got all the right trading conditions, dedicated to really helping you be a better trader. Okay, it's not easy, right? I never say it was easy, but you know, with the right guidance, with the right education, right, you can be a good trader, right? Look at me, I'm a young guy, I'm a full-time trader. Okay, I'm a young guy, I'm a full-time trader, I'm 32 years old, right? I just want you to know that it doesn't take you 32 years being in Bloomberg or, you know, being in a bank to be a good trader. You know, all it takes is 30 days, 32 days, learning the right stuff, right? And you can really, you know, you can really be good in trading, right? Desiree is better late than never. Okay, it's better late than never. So yeah, you know, we've been doing this webinar for the past 1.5 years. Can you believe it, guys? 1.5 years on IC Markets. We have seen so many testimonials pour in. People have taken their own trading competitions, funded trader tests. We got Cassandra, our dear Cassandra. She passed the FTMO test 3 times in a row, right? And learning the right stuff over here. You can be a good trader. All you need to do is the right guidance. And you know, with all the webinars here, you know, IC Market is really dedicated to helping you be a better trader. Okay. Anyway, if you want to follow me on Instagram, you can find me on Comfy Desmond. Really nothing much, right? Like I said, most of the time it's just my cat, me, my wife, a little bit of football, and soon I guess you'll be seeing my my baby boy who is coming. Right? My wife's due date is supposed to be 29 April, right? So anytime now, actually, it's pretty fun. Yeah, anytime in the next 10 days, right? So you'll be seeing a little bit of him. Yeah, Joanna, is gonna be fun. His name is gonna be Lucas, right? Lucas Leong. Nice name, right? I want to call him Elliot Wave, right? So, um, yeah, I mean Elliot, so I can name him after Elliot Wave and something, right? Thank you, Ajay. Right. If you want to find some of my indicators and tools, head over to Forex Army. Good stuff. Leandro, nah, not Leandro. Right. It would be a nice name, but I don't think there's a Singaporean or Chinese name. Right. We need something a little bit less, a little bit less ambitious. Thank you, Yan Chang. Right. Now let's begin. Let's begin today's session. All right. So this is the pullback support. Let me explain to you the psychology of a pullback support. Okay. Okay. So usually you will see price reacting once. Now imagine price comes back here again. It starts to come here, it reacts and it drops down again. It comes here, it reacts and it drops down again. Now let's break down the psychology of what is exactly happening here, right? Price comes back up here, it's testing. Now when price is up here, are there people who are short or are there people who are long? Are there more people who are selling or are there more people who are buying? Now, at this point over here, we had assume that you haven't seen this part yet, right? Assume that you have not seen price shoot up yet. How many of you think that price is there are more people who are selling, and how many people think that there are more people who are buying when price is over here? Are there more sellers? Are there more buyers? Okay, Diane saying it's more shorting, Kara saying more buying. A lot of people saying more sellers. Chuk Woon Ne says more buyers. Colin saying a little bit more buyers. Abdul saying more sellers. Okay. All right. Sama, Mark, we got buyers and sellers. Sellers, triple top resistance. So a buy only if there's a breakout, right? Sellers. And Gary saying sellers. All right. There are more sellers because you must think about it from a very, very basic kind of trading approach, right? Anyone who looks at price and see that it has reverse off here, reverse off here, reverse off here, and it's coming here, and people are saying, yeah, for the past 3 times it has reversed very nicely, right? It only makes sense that it will reverse again because this is clearly a strong resistance. Okay, it's clearly a strong resistance. Now, the problem with that, right, is that it's okay, there's nothing wrong with selling. There are a lot of people who sell when they see this kind of resistance, right? Who knows what kind of resistance is this called? Hint is similar to our previous webinar, right? When you see so many reversals happening, what kind of resistance do you call this? What kind of resistance do you call this? Anyone want to take a guess? Sarah, you can't see my screen. You should be able to see my screen. I can confirm that you should be able to see my screen. If you're only seeing my face, I do not blame you if you only want to see my face, but I think there's a toggle somewhere that can change between like seeing the screen and seeing me, right? Some people say overlap, some people say artificial, some people say pullback, tweezer, right? Supply strong, right? I know. Come on, guys. It's actually a swing high resistance, right? It's swing high resistance. It's very simple. That's a multiple swing high, 1 swing high, 2 swing high, 3 swing highs. All right. So naturally, when you see this, is just called a very simple swing high resistance here, a resistance zone. That's not wrong, right? So when prices break here and it goes up, now the people who are selling over here, thinking that prices will go down, correct? The people who are doing that are now being taken for the ride of their life. All right. Price is going up. Price is going up. What are they doing? They're panicking. They're holding on to their losses, right? And as it continues to rise, they're like, oh man, this is terrible. I can't even sleep at night, right? Oh, it continues to go up. Then they start to question the meaning of life. It's like, I can't believe I didn't use a stop loss. I can't believe the world, the universe is plotting against me. It continues to rise up. They start to question the whole meaning of the universe, right? They start to question religion, they start to question everything, and it continues to rise, it continues to rise, and they are taken for a terrible, terrible time as price continues to rise up, and it happens a hell lot, right? It happens a hell lot. They're taken for a ride of their life, and they can't sleep at night. They're tossing and turning. They're like, I can't believe it. Oh man, I thought that it would reverse, right? But it didn't reverse. Now it's so terrible. I'm going to quit trading. Trading sucks. Trading is terrible, right? But then price starts to drop down. Yeah, Osama, market is targeting you, right? So price starts to drop down, and they start to say, oh, maybe there is light at the end of the tunnel. I see the light again. Maybe there's hope in this world. The world is not such a cruel place. Price, I might not be such a bad trader after all. What was I thinking? It's actually dropping down. I'm not that bad a trader, right? And it finally comes down to here, where price broke out. Okay. Now, when price comes down to here, and you got a whole bunch of people who sold over here, they were taken for the ride of their life. And now they're coming back down to earth, and it comes back down to here. What would they do? Would they close off their positions? Would they get sell more? Would they start to add on to their positions? Would they close their position, or would they add on to their position? What do you guys think? Right, like some of the answers. Right, I got a couple of different answers over here. It's very, very interesting. It shows the psychology of people. Right. Right. Yeah, they might stop trading altogether, Fabio. Right. Okay. Now, most people will close off the trades. Most people will close off the trades, right? They've been through a terrible time. They will not close the trades on the way down. On the way down, they're not going to close the trade. But the moment it comes here or makes a little bit of profit, they're going to close it off, and they're going to say, wow, thank the good heavens, I just dodged that bullet. They didn't use a stop loss, right? They almost got margin called out. They might have been margin called. They were depositing more money, right? Just to prevent the position from being stopped out. It finally returned to break even. What most people do is they close off the position. Now, in trading, when you close off a sell position, it essentially means that you're buying, right? To close a sell, you must buy. Close a buy, you must sell, correct? So if a lot of people are closing off their positions and a lot of people are buying, right? Closing your position, in this case, closing your short position means you need to buy to cover it, right? It means that a lot of people are suddenly buying. And that actually is a reason why you notice that, price tends to bounce up very nicely. It doesn't bounce up all the time, but that's the psychology behind it. People, the short sellers, are closing out their positions, right? And then that results in them putting in buy orders to close off their position, and that pushes the market. That creates an influx of buy orders that causes the market to rise up, and that is the psychology of a pullback support. Okay, that's the psychology behind a pullback support and why it works so well. Okay. Now, the same is true. The same is true for overlap resistance. Okay, same thing, price bounce once, price bounce twice, price bounce 3 times, right? They think that price is really going to continue bouncing. So you got this nice area over here. Okay, price comes down. It breaks this level, right? It breaks this level, right? Because everyone thinks that it was going up, but it breaks it. So the people who are buying, that being taken for the time of their life, right? A roller coaster ride of emotions, right? It goes all the way down. They start cursing the heavens. They start cursing the life. Comes all the way down, and then it starts to come back up. And when it starts to come back up, right? That's where when it finally reaches here, they are like, all right, thank the heavens. I'm at break even. I'm gonna close off the trade. I'm just thankful I managed to get out a break even, right? And because of that, there's an influx of sell orders. There's an influx of sell orders that pushes price all the way down. That is the concept of a pullback resistance. Okay, guys, that is the concept of a pullback resistance. Now, any questions you guys have so far on pullback support and pullback resistance? Okay, Joanna is asking, why did it break? There is no clear reason why it breaks, right? You don't need to know the reason why it breaks, because it's the same way you don't need to know the reason why it bounced. All you need to know is that when it does break, that the next high probability trade is when price comes back here. This is the part to sell. Get in, sell when everyone, all the buyers are, panic closing their positions, right? Because that will give you the momentum to take trades, for trades to go down. Mayursin is asking, where do you place a stop loss, right? Okay, so if you were to get in here, right? Let's just say, let me just erase my erase all in the slide. Let's just say we enter into trade over here, right? Where would your stop loss be? Would your stop loss be at A over here? Would it be at B over here? Would it be at C over here? Would it be at D? Where would your stop loss be if yeah, or maybe let's put it here, would it be at E? Where would your stop loss be if you're a trader? See a lot of answers. See a lot of answers. Majority of you guys are saying C. Interesting. Fabio B, if I'm wrong, I'm wrong. Yeah. All right. Just I mean, it depends on take profit, but your take profit also kind of depends on your stop loss, right? Now, guys, when we're placing stop loss, we need to ask ourselves, why are we placing a stop loss at a certain place? A lot of people answered C. A lot of people answered D. Now, this feels like the natural safe option, right? But the problem is that safety, comfort comes at a price. You having a further stop loss would mean you need to make more profit in order to have a risk reward of 1:1. Okay, let me repeat that. The further your stop loss, right? So a lot of people just think, don't think of stop loss this way, right? Is that the further your stop loss, the higher the price you need to pay to make more money. Okay, I will touch on that a little bit later, but what I want to show you is that if we expect prices to be here, I like Jasper's answer. He said B. If I'm wrong, I'm wrong, right? And that is the correct answer, right? B would have been the correct answer. You can see that price, price has bounced multiple times off that level, right? You can see it bounce once, bounce twice, it bounced 3 times, it bounced 4 times. So we expect prices to really drop from here. If it drops even down to here, right? With B, you might have a risk reward of 1:6. If you use D, your risk reward is maybe 1:2 or 1:2.5. That is the difference. I want you to embrace the concept that if you're wrong, you're wrong. Okay, there's nothing wrong with being wrong. But if you're right, your risk reward is 1:6. In this example, it's a really good trade. Call the reversal. Is there a reason why you want prices, to have so much breathing space, comes back all the way up to here, just to this level? Why must it reach this level before it tells you that your original idea of a pullback resistance is not working? Ask yourself that. Why does price need to go so high just to prove you wrong? What does it mean? Why does it need to go so high just to prove that you are wrong. The moment price, if we think that our case one hypothesis is that if we think that price is really going to reverse from this level, if price doesn't, comes back up to here, if it doesn't reverse and it goes up to here, you're already wrong. If it comes up to here, you're already wrong. If it comes up to here, you're even more wrong, right? And it comes up to here, you're super duper wrong. But whether you are wrong over here, you're wrong over here, you're wrong over here, you're wrong over here, or you're wrong over here, the answer is that you are wrong, right? And it doesn't, and you have lost some money, right? But the difference is that the more you can swallow your, I wouldn't say ego, but more of like the more daring you are, right? To say that if I'm wrong, and I'll get out, the better your risk reward can be. Now, of course, there is a, I can see a couple of people saying a liquidity gap, right? Liquidity gaps, right? Okay, technically you can put E. There's nothing wrong with putting E. I would say E would be an okay answer too, because it is beyond a key area of resistance. But the thing is that I'm looking over here, I'm seeing this bounce, this bounce, this bounce, this bounce. That's why I would consider this as my major resistance. B will be fine, E will be fine. E will be fine is if you consider this entire area which I highlighted as the major resistance. Nothing wrong in both cases, but yeah, you want to put your stop loss just slightly beyond a key area. Now, about liquidity grabs, they do exist, which is why, when you put your stop loss, you always put it slightly beyond a key area, right? Don't put it exactly at a key area, all right? I'll show you what it means in a bit, right? I mean, yeah. Desiree is saying B can be wicked out. B can be wicked out. It is true, right? With a tighter stop loss, there is no denying that you can. There is a higher probability of you getting wicked out. There is no denying that at all, right? But that does not mean you don't factor in where the wick might occur. So I wouldn't put my stop loss over here. Maybe I'm gonna put it this. I'll call it I'll put Z, point Z over here. I wouldn't put my stop loss right over here because there's a very high chance that I get wicked out, right? I wouldn't even put it slightly above. I'll give it just enough breathing space so I don't get wicked out, right? So you look at the different sizes of the wicks, you roughly know how big one wick is. Try to find the next big resistance. Put your stop loss slightly beyond that key resistance, right? For those of you guys who are unsure what I mean by stop loss beyond a key level of resistance, what you want to do, I'm going to send the link to you guys over here now so you guys can kind of take a look at it. You want to go to IC Markets, you want to go to Playlists. And you want to go down to, wrong playlist. This one. This is the link that you want to go to watch. Talks about take profit and stop loss placement. How do you target the right take profit and right stop loss placement to avoid the liquidity gaps, avoid the gaps, avoid the wicks. All right. Okay. Now, let's move on to the next point. Overlaps. Okay. Okay. I guess, yeah, it looks a little bit weird. Now, overlap. So this is the psychology of overlap. Remember, there's one major resistance that happened over here where price started to drop very nicely. Now, price starts to recover again, comes back up here. Remember what I showed you just now, right? It does not need to be 3 times. It does not even need to be 2 times. Even a single time works, right? But because when price comes back to here, all those people who saw this drop, are thinking, all right, now is the perfect time to play it again. I'm going to play that drop again, right? And they decided to short. The problem is that if price actually shoots up beyond there, price surpasses the swing high resistance, it becomes a pullback support. Okay, if price breaks out, right? People are taken for the ride of their life, right? And then of course, yeah, that's the part where it starts to pull back a bit. But the moment it pulls back, right? The moment it pulls back over here, the whole bunch of sellers, they close off the positions and then it becomes a nice little overlap. The moment it bounces, right? The moment this bounce occurs, it turns from pullback to overlap. Pullback only happens when price has broken out, right? It has not pulled back to the support level yet, right? I mean the breakout level. Once it pulls back and it bounces, then it becomes an overlap level. All right. Okay. Do you have any questions so far? Okay, we got Chukwuneyes asking if I could repeat what I said about the higher your stop loss. I'll try to explain that in a bit. Maybe with a chart, I'll be able to show you. Okay, seems like my webcam seems to turn on and off intermittently. All right, so now we got questions coming in saying how to identify a false breakout in this scenario. Order blocks are useful, but you need clean data for good order blocks. Meaning that if your order block is, which is kind of like volume, if I'm not wrong, if your order block is based on a single broker's data, is not the best thing to use, right? Why order blocks work very well with equities is that they're all traded on a centralized exchange, right? That's why it works well. But if you get for forex, there's no centralized exchange, so the order blocks data might not be that useful. So I'm just reading the question, Joanna. If it goes underneath it, a breakout from but bounces off. Yeah, so support and overlap, right? When we're talking about overlap, support and resistance, price can react one time, two time, breakout, support, support, down, up, down, up, down, 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 multiple times. Why it's called an overlap is because price has reacted from the below, price has reacted from above, right? So because of the agreement that this is a level, right, we then can like everyone's agreeing that this is a key level, then we call it an overlap, support, overlap, resistance. Okay, seeing some questions come through. Marugesh is asking, how do you identify a false breakout in this scenario? Right. So usually, one of the tips that I use, you can look at advanced price action strategies that I did. There are different candlestick patterns that help you forecast whether a real breakout is happening or reversal is happening. Okay, let me repeat that again. There are candlestick patterns that help you forecast whether a reversal is really happening or a breakout is really happening. Right. So there are reversal patterns and there are breakout patterns. Breakout patterns, like in this case, right about over here, if there are three white soldiers, right, it suggests that a very nice breakout might be happening. Over here, if there's like a double tweezer bottom or a dragonfly doji, it actually suggests that a bounce might occur quite strongly. Okay, key important thing to take note of, especially in trying to play these reversals, so actually look a little bit at price action. Okay, how many hour chart is ideal to look at specifically gold? I usually gold is H1, H4. Yeah, it's usually H1, H4. Okay. Now, I do want to show you one thing, which is combining them together. Okay, combining them together. In this example, right, we can see that there's a breakout. This is a pullback resistance, right? Price bounce up one time, it's coming down, it's coming down. It bounced up a second time, it finally broke out, right? And it's kind of testing it over there. Okay, what you want to take note of is that there's this nice bearish Ichimoku cloud over here. Price has crossed below the Ichimoku cloud, so there's that bit of bearish momentum there. Next slide. Price makes a pullback to the current resistance. There is also a overlap Ichimoku cloud over here. There's also a pullback resistance over here. All right. So what happens from there is that you have one reason, you have two reason, you got a one, two. Yeah, I guess in terms of chart pattern looks like, I know you can't really see, but it looks like a little bit of a reversal pattern. So you got three reasons here why price might reverse. And from there, price really reversed, right? Price reacted off this level and started to drop. And that's the amazing thing, right? When you combine multiple things together, right? You combine the pullback resistance, you combine the Ichimoku cloud, you combine the you combine the price action over here. All of it lines up very nicely to lead prices further down. Okay, important thing to take note of when you're trading is to try, don't just trade overlaps, don't just trade pullbacks in isolation. Try to combine them together to increase the probability of your setups. Okay, now I do want to touch a little bit on the charts, right? So if you request me, you can send them through. I'll see if I can see any key overlaps for us to look at. Okay, so for example, in this case over here, right? I need to show you an example of an overlap, right? So overlap usually functions in the form of areas, right? You can see this level by itself is actually pretty good. Why it's pretty good is because you can see a nice little resistance here. Sorry, a nice real resistance, a nice bounce, a nice bounce, a nice bounce one more time before it finally broke and price come up closest to its resistance, came back down, right? And then of course it take up from there. So this is an example of overlap resistance. Okay. However, I also realized that this is an equally nice resistance level. Why is it equally nice resistance level? Price did, the wick did come all the way down to there. It did come all the way down to there. There's a resistance over here, and price bounce off this level, right? So this is then also a overlap support. Okay, so you combine both of them together, right? So in these kind of circumstances, when they are relatively close to each other, right? I'm going to put the where's my template? Yeah, support level here. I'm just going to put this as a dotted support and a support area. There you go. So this is now a nice overlap support. There's you can't trade on GC1, right? That's actually a futures. It is slightly more accurate because it's a real futures, but you still need to trade using gold. Right? Yeah, so this will be overlap support that we can play a bounce from. It's also the level where if price successfully breaks, you can go up a lot further. No, I'm not exactly focusing on days. This is the 4-hour chart. Okay, 1960 level. Yeah. All right. So let's see over here. Now, overlap levels can also be used like that. I realize I need to make a copy. Yeah, so let's see. So overlap levels is slightly harder, all right? I'm going to show you a couple of examples. Where will you draw the overlap resistance over here? Will you draw it over here? Will you draw it over here? Will you draw it over here? Okay. Answer 1, 2, 3. Which one will be your overlap resistance? Are you guys sure? Okay. I get overwhelming number of people who answer 3. A couple of you guys answered 2. Okay, overwhelming number of you guys answering 3. And that is correct. 3 is the overlap resistance. I'm very glad you found it. So some people tend to be confused because of the wicks, right? But don't let the wicks fool you. Okay, don't let the wicks fool you, because you can't possibly putting a crown No, as in like a pullback resistance over there. Okay, really smart people. But yeah, so I hope you kind of get the hang of this overlap. Let me see if I can find anything else. This is another example of a nice overlap resistance, right? You can see immediately how nicely price reacted one time, reacted another time, reacted, reacted a couple more times. You can see why this is a very nice level. Okay, that's why a very nice overlap resistance over here. Let me try to find a pullback, right? Ouch. This could be a pullback. Yeah, this could be a pullback resistance, right? A resistance could have been here. Pullback already happened. It's hard to find a decent pullback resistance, right? It's hard to find a decent pullback resistance. The only pullback support I see over here is this one over here, right? But it's not that great a pullback support, right? Because this is actually a very pretty small move. This is a great pullback support, right? You can see how price previously, reacted 3 times off this level, right? I'm going to show you the psychology of it now, right? Over here we go. Price react 1 time, react 2 time, react 3 time. What's going to happen? Price, people are thinking, man, this is really easy money, right? Price comes back up here, reacts the 4th time, drops a bit, right? And then it takes off, right? So those people who are holding onto the short positions are in for a time of their life, right? And losing money, they're losing money, they're panicking, they're panicking, they're panicking, they're panicking, and then it comes back down here, okay? And then of course, when it finally comes back down here, they close off their short trades and boom, it bounces up a bit, right? It bounces up a bit, and that is why an overlap, a pullback support is very strong, and it becomes an overlap most of the time when you see it happen. Okay, I think someone's asking Frank Yen. I'm going to take a really quick peek at Frank Yen, see if I can see anything. Yep, this could be a good pullback support over here, right? You can see price react off here. When price coming here, people think it's going to drop, but it didn't. It shot up, retraced, and then bounce up. So that is one of the key ways you can play a pullback resistance, a pullback resistance or pullback support. All right, guys. Of course, when you combine it with Ichimoku, you combine it with channels. Like in this case, it's not only a pullback support that happened over here, right? I'm pretty sure you can find the channel support over here. You can find a channel support over here. You can find the Ichimoku over here, right? Providing very nice support, right? You can probably find the Fibonacci retracement. And you can probably find a Fibonacci projection from here down to here, up there. Yeah, so you can see we got 61.8, we got 38% retracement, we got ascending channel, we got Ichimoku, we got pullback support, all of it lining up nicely to give you that nice little bounce upwards. Okay, yeah, thanks Osama for spotting this example. It's a pretty good example, and I hope you found today's session useful, right? In understanding the psychology that goes behind a pullback support, the psychology that goes behind pullback resistance, and how it ultimately turns into overlap. Why it takes traders for the time of their life, going up, starting to question their existence, and when it comes all the way down, they close off their position, and the very act of them closing off their position causes an influx of orders into the market, leading it to, in a pullback support, leading it to bounce, in a pullback resistance, leading it to drop. Okay, right? Yeah, I really hope you guys enjoyed today's session. I will see you guys tomorrow in a live market analysis, right? It'll be a fun time together. Tune in tomorrow. Catch me there. Otherwise, I'll see you in the IC VIP room, right? And we have more fun over there too. Okay. Thank you, Mark. Thank you, Carol. Right, Desiree, Tuan, Kanembak, Donald, Clay. I hope you guys found today's session useful, right? Jikong, right? Charles, Marugesh, Carlo. Yeah, Carlo. Hope you like this session too. Fabio, Simon, so many Lars. Right, thank you everyone for tuning in for today's session. All right. I will see you guys tomorrow. Please help me participate a little bit more in the ICVIP room, right? I do want to see you guys practice as much as possible over there, right? Help each other. Iron sharpens iron. Help each other out, right? To be better traders. Okay, that's it for me. Stay safe, trade safe, and oh man, Graham, I hope you didn't just came in. I hope you didn't just came in, right? Yeah. Let's meet on our next session, Ahsoka. See you guys. Stay safe, trade safe. Peace out. Right. Take care, guys. Adios. Thank you very much, Tendo. Adios. Bye bye, guys. Adios. Bye bye.